Hi, welcome to the Founders Conversation series under the auspices of the First Wings Connect program by IDFC FIRST Bank. Today we have with us Manuraj Jain, who is the mind behind the Money Club, which has an interesting tagline that says on demand liquidity for low income users. Before we start, let us get to know the founder a little bit better. Manuraj Jain, an IIT Kharagpur and INSEED alumnus, is the founder of the Money Club and Vriddhi, platforms that are focused on expanding financial resilience for undeserved users and employees. Thank you so much for joining us today, Manuraj.
Thanks for having me, Kajal, and happy to be here and share about the Money Club.
Great. So, Manuraj, could you please describe your startup in brief?
Sure, Kajal. So, see, today in India, there are 40 crore lower middle class Indians who don't have formal access to credit or basically funds in times of unplanned needs. So, what they do is they resort to informal sources of very expensive and risky credit. That's where Money Club steps in. We built a deep tech platform that is powered by a NBFC P2P partnership. We leverage the 700-year-old mechanics of Roscals, where users can save and borrow through a single product. We use this to provide on-demand liquidity to our low-income users. When I say on-demand liquidity, I mean amounts between 6,000 rupees to 50,000 rupees in times of contingencies, effectively serving as a financial safety net for the user. So our gamified user journey on the platform encourages discipline, which means that users progress to larger clubs as they keep building a good transaction history on the platform. Since our launch, we have acquired around 8 lakh users till date who have done 7.5 million transactions on our platform and have rotated close to 560 crore rupees on our mobile app called the Money Club. Our business model has achieved a phenomenal LTV to CAC ratio of 10:1, making Money Club as one of the most sustainable and scalable businesses in its space.
Oh, that's awesome. So, what are the pain points that caught your attention that you have decided to address?
See, I think Money Club addresses a very critical issue that plagues the lower middle class of India. Lower middle class, there are 400 million people in the country. It's massive. They don't have access to funds in times of contingencies or in times of unplanned crisis. There are products out there which address the planned situations. But during unplanned crisis, there is no product. The only product available for our users is FDs or RDs or even borrowing from family as well. So this demand has not been met till date by formal institutions. And what happens effectively is when imagine a small shopkeeper in Gorakhpur, tomorrow he gets into a small unplanned crisis. He requires 20, 30,000 rupees. He will have to either go and borrow from his friends and family, which means that he has to put his social equity on the line, or he will have to go to a local money lender. And we all know, how expensive local money lenders are and what their incentives are. The incentives they basically act like loan sharks. So this is basically the biggest pain point that is plaguing our segment or the country today. And using our Rosca model, which is effectively a peer-to-peer model, we have developed a product that can address the financial resilience of our users very effectively.
So, that is so relatable. So, how would you describe your value proposition and your differentiation?
With a fully digital journey, today users get fund within 6 hours, and that too directly in their bank account, sitting at home without any paperwork. Lenders, on the other hand, can earn almost 4 times more risk-adjusted returns as compared to bank FDs or RDs. So our standout value proposition is basically delivered by our AI-powered real-time credit underwriting engine that we built. It's an unprecedented approach to underwriting low-income users. Typically, banks and NBFCs, they use a static underwriting model. We have completely re-looked at the way underwriting is done, and we have developed a dynamic real-time underwriting model. Our matchmaking engine then dynamically match peers to each other. The peers are there are some people who have funds and some people who don't have funds. So our engine can dynamically spot these people on our platform and can match them. All this while keeping default rates below 1%. The third most important differentiation, I would say, is our gamified user journey. In this user journey, we make the user transact almost 300 times in a year, as compared to a typical credit model, which makes the user transact 12 times a year. So effectively, we are capturing almost 20 times more data than typical credit models out there. So this data it feeds into our underwriting engine, and the underwriting engine then moves the user further up in the journey. So this way, we ensure that we are relying, our underwriting relies on massive amounts of data. And in a segment where today nobody has data on, no banks, no NBFCs, no fintechs are lending to this segment today.
Okay. So that is really nice. Moving on, what kind of moat do you think the Money Club has?
See, in our product, we don't rely on credit bureau data at all while onboarding users. Our moat is our dynamic underwriting model, which is being trained daily on data points which we are collecting from our users. Now, this at scale will only improve as we will garner even more data points. So, as users grow, automatically improving our algorithms and effectively improving our ability to screen unscrupulous users very early on in the journey. This is not easily replicable, as the engine has already been trained by over 7.5 million data points and 600 crores worth of transactions. So anybody who wants to come in and enter this segment today, they will need at least close to 30 years of this transaction data to get to us. If they manage to copy the gamified journey, I mean, we have at least a 5-year start from other competitors.
Great. Well, what kind of upsides do you envisage are likely to catch the attention of potential investors, and over what time frames or milestones?
See, I think since our previous fundraise, which happened in 2025, our revenues, we have doubled our revenues from 30 lakhs a month to almost 70 lakhs a month. It's highlighting a 2.3x increase in under a year. Our transaction volumes have also grown from 10 crores a month to 20 crores a month. We have increased our agent network from 1,000 referring agents to 3,000 agents in a month. All this has been achieved with default rates less than 1% and a very superior LTV to CAC ratio of 10 is to 1. We increased it from 6 is to 1 to 10 is to 1 in the last 12 months. Financial inclusion remains at the heart of what we do, and we want to build a product that builds lasting financial resilience for our users. It's the one thing to be able to participate in a financial system. The other thing is to truly be able to drive economic growth. That is what our app is capable of doing. Not only do our users get access to on-demand liquidity to cover any unplanned crisis, a need or want, but when they are not in crisis and they don't need to borrow, they're able to earn interest on their savings, which is almost 4 times as compared to bank FDs or RDs. We've been able to reach over 8 lakh users till date through our app. And one of the most important developments in the last 12 months has been on the regulatory front. We realized that as we wanted to scale this product up, it had to be done under a proper, sturdy, regulated framework. So we partnered with a peer-to-peer lending NBFC. We've become an LSP. We are also looking to acquire our own NBFC P2P license. Discussions are well underway. We have moved 30% of our transaction volumes into this regulated product, and in the next 6 months, we should land almost 100% of our business there. To further bolster our position, we are also applying for our own P2P NBFC license so that we ensure complete business redundancy. This highlights that not only are we on a trajectory to break even by the end of 2026 and start being profitable, but we will be also operating under a fully regulated umbrella. To top this all up, Money Club is the only fully scalable digital platform in one of the world's largest market, which is India. It's a $200 billion market. There is no other company out there. There were 7, 8 competitors which started, and in by 2015, almost all of them have shut down. We 2020, 24, 25, sorry, and for investors, effectively, Money Club offers an unparalleled opportunity to partner early on in building one of the largest companies in the country in the space today. And finally, to add an icing on the cake or a cherry on the icing, we have launched Vriddhi. It's a B2B HR tech SaaS product. This is targeted towards low-income employees, which can Vriddhi can enter organizations and create employee saving pools where employees can start accessing funds on demand using our Vriddhi app. We launched this a couple of years ago. We already have 4 active clients. We have launched in Bahrain, Qatar, and Vietnam. It has already begun to take global footprints. In fact, I would say green shoots are visible in Vriddhi. That's another $1 billion product that we have under our kitty. So for investors, this is a massive, I would say, an opportunity to, to generate windfall returns in the next 5 to 6 years.
That's really great. So, before we conclude, would you like to share your first impressions about the First Wings Connect program by IDFC First Bank?
Sure. My interaction with the First Wings Connect IDFC First Bank program has been very positive. I think the interactions have been very professional. Instructions have been very clear. The output and deliverables have been very clear. I hope this should yield results. The process and the approach seems to be very well thought of. I'm looking forward to see how this goes for me as well.
Yeah. Thank you so much, Manuraj, for joining us and for giving this insightful yet crisp conversation. And all the best for your future endeavors. Thank you.
Thanks, Kajal, and thanks to the entire team. Take care. Bye.
Thank you.